Welcome back to Inside Private Credit. This podcast is part of Woodbridge Learning, which is designed to provide education to wealth advisors in private credit. Today, we're going to discuss a topic that's probably not the most sexiest topic in private credit, but certainly something that's become more important of late, and that's the role of external fund trustees. It's a role that's heavily misunderstood in our industry, and we certainly get questions all the time about what trustees do. But, in the absence of a regulator and true regulation in private markets, and in particular private credit, trustees, I think, are coming to the front. So today I'm joined by Ben Jacob from Equity Trustees. Ben will hopefully give us some hard-hitting insights into the mystery of what the hell a fund trustee does. Welcome, Ben.
Thanks, Andrew. Great to be here. And yes, we're certainly aware that our role is quite often misunderstood.
And listen, it's a good place to start, Ben. I think for advice is just what does an external fund trustee actually do? I think it's probably a good place to begin.
Yeah, sure. So I guess we can begin with the fact, as you'd mentioned, the trustee industry often misunderstood by wealth advisors in terms of what it does and doesn't do. And especially in the absence of a regulator for the private credit space, which is what this podcast is about, the role of a fund trustee has probably never been more important. What do we do? Firstly, we are independent oversight of a manager. And why it exists is, and this is what I tell every investor that I speak to, every manager, we have a fiduciary duty to protect investors, to act in the best interest of investors, and see things through an investor lens. And that could be in relation to adding a layer of accountability, explaining what advisors misunderstand, that really hitting the fact that trustees are a core part of the structure of a fund and not just a checkbox. And again, that is particularly relevant in private credit.
Yeah. Why do you think advisors have sort of struggled a little bit with understanding trustees? Is it just because they're not new but have sort of come back into the front again, or is it confusing language? I mean, what is it that's confusing the market, do you think?
I think in general, it's because you see the fund name and you think, and from an investment manager's point of view, oh, these are the people that should be making making the decisions. But at the same time, it's someone else who bears accountability, is the one that's reporting to ASIC if something goes wrong, who's, as I said, acting in the best interest of investors. So, I mean, one thing that's quite unique is, for instance, we'll talk about the Woodbridge Fund for a second. The Woodbridge Secured Income Fund, it's actually, the official name is the Equity Trustees as trustee for the Woodbridge Secured Income Fund, not just the Woodbridge Secured Income Fund.
Yep. I'm a bit horrified sometimes when advisors ask, what does an internal trustee do versus what an external trustee does. And I think if the market truly understood what it means when you're your own trustee and you basically you're allowed to mark your own homework,
Mm-hmm.
I think that in private markets is something that's quite dangerous. But I think it's like anything, isn't it? When it's working, trustees are invisible, and when there's a problem, that's when you want a trustee. I think it's probably a good way to say it. So day to day, again, I guess deep diving into this, what the hell you do, Ben, is just day to day. Is a fund trustee doing in conjunction with the fund and on behalf of the fund manager and checking the fund manager?
So, I mean, the high level is just generally oversight, but that could be specific to fund documents. So any time a document is released that references the fund, that has to be checked by the trustee to make sure that any reference is correct, any disclaimers are correct. As a trustee, we would bear any cost or any fines that if we're making untrue statements in those documents. It's about reviewing, reviewing disclosures and reporting. It's also not being afraid to challenge a manager when required. Not at all times the manager might think and be acting what they think is in the best interest. It may be misaligned with what the investors want, and it is up to an independent trustee to be saying, actually, this is how you should be thinking. This is what you should be putting in there. And that's just transparency is just really, really important as what a trustee does. And some of the other things about focusing on governance, focusing on, again, investor outcomes, and really playing a role in identifying and managing risk that any fund will have.
Yep. I think there's always a misconception that trustees are passive, that they are sitting there, and as fundies, we're not dealing with you. And, my measure is, having a trustee is a pain in the ass. I mean, and that's really what a trustee should be. For a fund manager, is that it's way easier to be your own trustee. You can change your IM at will. We can publish your own monthly reports, but when you've got an external trustee, you've got someone over your shoulder, asking painful questions at times. But I think that kind of feels right, doesn't it? That a trustee should be a pain in the ass to the fund manager, if you like. And if they're not, something's probably all right.
And what service are they providing? Essentially, what are you paying them for?
Yep. Yeah. I think this passiveness is something that I think is misunderstood. And I think for advisors, they need to understand obviously what a trustee does, because they're complementary to the advisor, aren't they? They're helping the advisor in theory, obviously to the underlying investor, understand the fund and make sure that what we say we do. I think the other thing around this is just governance, Ben. I think advisors probably don't understand the importance of governance in private markets. Do you think that's fair?
Yeah, I think that's probably a fair statement there, Joe.
Yep. It's just them getting used to that. They can't Google private markets, isn't they? Just they're reliant on what we say. How do they know what we say is true? Trustees, I guess, give them some comfort that what we are saying is being vetted, if you like, and not just the returns of the fund.
Absolutely.
And on that, when advisors are looking at credit, what's your advice to them? And this is not a loaded question, but what should advisors be looking for, do you think, when they're investing in private credit?
It's a good question. I think you should be looking at, what checks and balances are in place. So what is actually the disclosure statement is probably the first thing you should be looking at. And usually that will be a PDS, but it may be an information memorandum. What is included in there, not just performance history, but performance history. How dated does it go back? And that might be because the fund is quite new, or it's because it's quite extensive. What disclosure they make, if with private credit especially, redemptions can often be trying to redeem from a fund. What disclosures have they made about whether there's an on-flow of redemptions? And that's something we've seen overseas with Blue Owl and Blackstone, where there has been a large number of redemptions, and there are gating mechanisms and I believe the Woodbridge funds are an example of this, where there is gating mechanisms to prevent an on-flow of redemptions to protect the existing investors who are in the fund as well as the exiting investors.
Yep. I mean, IM PDSs are hard, aren't they, for advisors, because they're big documents. The regulators politely pretty loose on how they're laid out. Advisors are being forced to read these things in detail. I think the blessing of recent we've seen is AI is certainly making that easier for advisors, I think, to scan these documents and find the redemption policy, find the gating policy, because some funds are on page 3. Other funds are on page 77. They're in different fonts. They're smaller, larger. So I think what we're finding, advisors are using AI increasingly to at least line up apples and apples. And I think that's been a good thing for the industry. And I think as a fundy, certainly we get the questions. When we see the questions now, they're a bit more structured. And I think, AI is making it a little bit easier. And I think the trustee on top of that kind of standardizes the output, doesn't it?
100%. My disclosure team at Equity Trustees would love the fact that I can either throw this in, but we have a golden template for disclosure documents, PDS, and the IM, which that is where every PDS and IM starts. And then obviously that will be tailored to different types of investments, different strategies, and so forth. But the core template it's a golden template, as I said, and the structure and the order of the the disclosures are all,
And something else, I'm always a bit amazed that people don't understand is that an external trustee signs off our monthly report to investors. So, which means that all our performance, all our unit pricing, all our statements are vetted and reviewed by equity trustees. In private markets, it's very rare, of course, is that in the public markets, you've got a lot more compliance wrapped around it. But I'm quite shocked that advisors sometimes don't realise just how they is giving. Doesn't mean their returns are amazing or the risk is right, but in private markets, without some sort of oversight, that risk return logic is very hard for investors to see, isn't it?
Yeah, I definitely agree with that statement. It's yeah, as you said, it's a niche per se in the sense that it is not as linear as you would expect in public markets.
Yeah. And I guess what, in terms of clients you're seeing now, Ben, in terms of new funds being set up, in your view, is this becoming the norm? Can you see that yet in terms of funds are being established in private credit now with trustees? Can you sort of see a pattern where we as industry going, or is it still a bit sporadic? Or
It's definitely increasing over the last 18 to 24 months, which is about the same time I've been working at Equity Trustees.
Yep.
It's definitely, there was a period there where it was exploding because there was such good returns, helped by a pretty healthy cash rate as a base, and that's makes it super important that these funds have a responsible, either an independent or a responsible trustee model that is protecting the investors that wish to invest in private credit.
and are fundies been driven to trustees because investors are demanding it, do you think? Or are fundies going, well, if I don't have a trustee, I'm not going to get this through investors, or have a sense for sort of where the demand's coming from?
I think it's probably a bit of both. Some
Yep.
is definitely a sense of obligation that they need a trustee, but then there are some who are, and it's probably the more established managers in general, understand that with the Australian regulatory market, having a trustee is required to protect investors, and that they're the ones that are more actively engaging and being much more collaborative with trustees in general, and to better assist investors.
Yep. I guess that leads into my pet topic of ASIC and, what ASIC has done and what ASIC hasn't done in private markets, and, the lack of regulator intervention really, seems more important than ever, which I also find frustrating and ridiculous, is that a regulator really is, forcing investors to push trustees rather than the regulator pushing a trustee, which to me always seems quite absurd. But, and you might, I guess, be a little bit careful against this, but what's EQT's view on ASIC? What's your view on what they've done in this space? Do you think they've done enough? Would you like to see more as a trustee?
I think it's the last 3 to 6 months, maybe even close to 12 months, ASIC have put a lot more resources into investigating more about the private credit market with the intention of protecting investors. And something that's come up recently is the REP 820. And they've reached out to us recently about collating responses for our managers, building a formulated response. Because we do have a number of managers who either have a direct private credit strategy like Woodbridge, or as part of their private credit investors as part of a wider strategy. And all of these investment managers have something to say and can provide valuable feedback and inputs for any response that we provide to ASIC. So that has been great. I think it's definitely been better the last 6-12 months, the engagement with ASIC on this. And I have to say that, and I've said this to some of my senior ups at Equity Trustees, that it's great that how Woodbridge are willing to engage in this feedback and this conversations with ASIC to make sure that this market is properly regulated.
And without trying to get you in trouble internally, but whose responsibility is to clean this, when I say clean the market up, I guess clean the perception of the market up, because obviously, there's lots of good private credit funds, absolutely. But there's a perception in this asset class that, it's full of managers that are hiding risk for substandard returns. Whose responsibility is this? Is it ASIC? Is it trustees? Is it research? Is it advisors? Where does a trustee sit on that mindset of who should be actually driving this?
That is a bit of a loaded question, Andrew. I have to say, my personal take is I think it's a bit of everyone's responsibility. I mean, we should be looking at a top-down approach. So obviously a lot of that should come from ASIC on trying to say this is how we want things to be done. These are the things that need to be cleared and checked when you're investing in or when you're wishing to issue a private credit product. And that's the point of a trustee, is our responsibility as a trustee to make sure that everything is done the right way by the managers, or so that the investors are protected as well. And then from the flip side, advisors, when they are communicating with their clients, should have a basic understanding of what the product is and how regulated and how many checks and balances per se, again, not the sexiest thing in the world, that the funds are offering.
Yeah. I'll ask you one, controversial question. Why doesn't ASIC just regulate that all private credit funds must have an external trustee? Why doesn't it just do that?
It's a very good question. I'm not too sure I can answer completely.
Yeah.
All I can say is there is pros and cons with the internal and external trustee model.
Yep.
Obviously, I believe in the external trustee model as as an employee of equity trustees. But if you are going for an internal trustee model, it's vitally important that if you're, as from an advisor researching this, is that the investment manager has the scale to do that. If you're a small investment manager, you're probably not going to have in fact, it's very highly unlikely you're going to have the resources to do so.
Yeah.
Whereas if you're a bigger firm, you may be able to do that, but there are certain checks and balances, such as the trustee function has to be sitting directly away from the portfolio management function. There can't be any overlap in production. The only common factor is they're employed by the same people, but they're definitely different departments with a Chinese wall.
Yep. Well answered. I don't think you got yourself in trouble there, have you, by answering that? To me, it's simple. Yeah, just regulate, either regulate the market or regulate that the market must appoint a private regulator, and advisors' life would be a whole lot easier. But I just get frustrated that advisors are forced to go read non-standard docs. They're forced to find out if you've got a trustee. They're forced to then work out what the hell that trustee does or doesn't do, because it's not written down anywhere in the IMPDS as clear as it should be. So the poor advisor's got to pour ass up through all these funds to work out who's got good governance or not, and it's difficult. And I think, and I don't just whinge at that for funds like us that are trying to be best of breed governance. It's not that. It's just that for your average advisor, how are they supposed to go through all that and work out just transparency before they even get to risk return? I mean, that's their job as advisors. But ultimately, just governance is made so hard, I think, in this country for advisors in private markets. In a market that we all know is being heavily relied on by our economy now, and private markets is here to stay. So I got to be careful I don't ramble too much on that. So crystal ball. I guess last question to you, Ben. Just as an industry, what where does the relationship with private credit trustees go in the next 12 months? Does it change? Is there anything sort of coming that you see?
There's a few things. I'd say the biggest one would be disclosure around liquidity and disclosure in general, but specifically about liquidity. And I referred to about if there are large redemptions, making sure there's gating involved in funds. That would be probably the number one, but it's just setting expectations about standards. It's for us as trustees to be actively challenging managers if there's something that doesn't seem right. And you know what? It may be a learning experience for us as well. Okay, this is not something we'd looked at. It's certainly a two-way conversation. It's not trustees saying this is this and this is that. We are also willing to learn to ensure that investors can benefit as well.
Yep. Yeah, no, I think that's, listen, it's good for the industry, isn't it? I think questions are a good thing. I don't think anything harmful is going to happen in private markets by people asking questions.
100%.
Particularly in credit. So, listen, I think it's probably a good place to leave it. Thanks, Ben. As always, the intent here is pretty simple. It is to not talk about product, is to help advisors navigate their way through private credit, navigate their way through how to assess private credit funds. Thanks again, Ben. It's nice to see that trustees come out of the cupboard. Guys get a bit of sunlight now and again and talk about your industry. And for advisors, you can find more about Woodbridge Learning in the show notes and on our website. Until next month, thanks for listening.